What's up? What's up? So this week was amazing, and price action was amazing. Everything was amazing, and I'm still sleepy. Look at my eyes. Uh, anyways, this was going to be a long video. This is going to be a very, very long video because I'm gonna backtest. So let's go, I guess. That's gold, and I'm gonna go Raymond. So that's 31st of October. Oh shit, I'm on the good side. So that's it. First October. Okay, cool. I'll just clear out the drawings. So what I'm looking at right now is a sweep evaluation range for the London highs. So that's a sweep. There's another sweep about the London kill zone high. And we also are heading into a 15-minute time frame fair value gap. And then also probably sweeping this internal highs, creating an equal highs. To have a me to see. So I'll be fine with sleeping 795. Ooh, that's awesome. That's really awesome. So that's the final fair value gap that's been holding bearish. So let's see how this one plays out. That's going to be a target. That's going to be a target. Really far away from the all-time highs. So the price is being bearish right now. So let's see how this one plays out, right? So that's a zone. Okay, let me just go to one more time. I want to see a sweep above this high after market opens so that the price can go down. So market opened, went up sweep. That's a clear indication of being bearish. Sweep. We didn't actually close around this candle. That's a weak candle. I'm not gonna judge on that. Shit. So after getting the market structure shift, that's where it's going to be my first entry. And why it is because we are also creating a fair value gap. If the price doesn't create fair value gap, then the possibilities of the price going to continue back going up is higher. So the thought is fair value gap this trade is nothing. So I'm gonna put all my money on that trade. So so and my stop loss is going to be about these highs. And where am I gonna target? I'm gonna target London low. So that's the most cleanest target. And we also have a clear break even point. So let's see how this one plays out. That's a good sweep. Now I can break in the trade. So once this happens, top loss is going to be at the equal highs. Why I'm doing that? Because we are inversing really aggressively. We are inversing this bullish value gap really aggressive. It was really aggressive, and we are also creating a shifter structure, a market mean shifter structure, and also a parallel gap. So if the price is going to inverse this parallel gap, then we are wrong. And imagine taking the first trade right up here and targeting line and low. So it's like that. You're keeping your stop loss above, and this is where your first entry. So it can be like that. You can also add positions right here. It's up to you. It's up to how you are managing your risk. So boom, hit. That was a clean when a support trade. So after something like this, walk away. That's the biggest lesson for me from this week, Friday. I literally cannot talk. Okay. So that was a clear trade. We are also having a high attention narrative, high attention inverse from high time frame inverse from a 15-minute fair value gap. So 15-minute fair value gap, we are actually respecting the 15-minute fair value gap. And we are also inversing the 15-minute fair value gap. So which is actually a good sign the price is gonna go down. So even if you're not taking a trade right around here, after seeing this candle flows, could take an entry right around here and then have this as your break-even point and still target the same liquidity. So after this, basically done and go to the next session. So that's what I'm gonna do. Holy shit. Market open gap. But literally look at this. This could be the potential target. So see the other place. So the reason why I'm being bearish now. So let me just break it out. So the reason is not because of this whole move, not because of this whole move. It is because of this one narrative, literally one narrative. I'm not looking at any other time frame, not looking at any other fair value gaps to the left, not looking at anything but this. So this is what I am following and I will be following. So what is it? So mark out the recent 15 minutes fair value gap. Make sure if you're respecting that fair value gap. And before market open, if you have a 15-minute inversion, that could be much more effective, bro. So we are actually going to be bearish right now. Reason, strong push, and also a recent 15-minute fair value gap being disrespected. So which is a clear sign that the price is gonna go all the way up, all the way down to probably this low, probably this low, probably this one. and also this 15-minute fair value gap, obviously. And if you could see, that could be a daily time frame fair value gap too. I bet that could be a daily time frame fair value gap. Maybe I don't know what to call this, but that's a daily time frame fair value gap. So I have to go to the 1 minute time frame now. So we are investing a 15-minute fair value gap, so it's a clear signs of being bearish. And maybe if I'm going to take a trade, I want to see a sweep above London high or any sort of internal liquidities probably. So that could be a thing. That could be a thing. So once I want to see a sweep above this high, or I don't know what else to see. Well, for one thing's for sure, we are investing a 15-minute fair value gap, and let's check how this 15-minute fair value gap can hold up. So still holding for me. I'd also like to check on the 5-minute segment fair value gaps inversion, 5-minute fair value gap. We need to be inversing that fair value gap in order for us to go up. And for now, the market hasn't opened. So this fair value gap inversion, I could actually see the price going up to this highs, and maybe we'll see after that what happens after that. So okay. So we inverse that 15-minute fair value gap, and let me go ahead and mark that up. I think the price is gonna head towards that 15-minute fair value gap. So after seeing the reaction up there, internal high sweep, there it is. I'm still going to be bearish, right? So that's what I'm looking at. So okay, go 1 minute second again. After seeing that inversion, so we got the market shift. I'm gonna take my first entry right around here, and I'm gonna target this low, giving my stop loss about this 15-minute fair value gap. So even the price want to come back up, swoop this high, and we are protected. So Once the price close below this low, that's my break-even point. And also once the price is doing these kind of things, creating a fair value gap, and we can actually reduce the risk. So that's how you manage your risk. I'm actually trying to actually master this thing, like to reduce the risk, or like not actually coming into break even, or like looking at the number. So I'm up $500 and I have to break even the trade now. It's not like that. I'm actually trying to do the same thing when I'm trading live. So let's see how this one plays. I literally look at that. Like if you have a break even, if you have break even, that could be in a stop out. So you could have been stopped out. So keep that in mind. I'm actually trying to do the same thing. So we are actually, if I see a close below this low now, and I can actually break even the point, break even the trade. So we also have a 1 minute time gap, so which can be protected. So price did the things that we exactly needed to, expected to. So I'll I'll see how this one plays out. Would I be holding this trade? Nah, man. I would have closed it by now. But this is a paper trade, so bad. I wouldn't be even, I wouldn't be even, um, what to say? I wouldn't be even be sitting in front of the charts at this point because I would have been gone. My time frame is 9:30 to 11:30. Max 11 o'clock. So this one is a nice trade. And this would have been my target. This would have been my complete target. And I think I did take this trade. Yeah, I did take that trade, but I didn't let it run. Let me show that. So that was a trade. So I actually entered the buy position, and excuse me. And I got stopped out on the first trade, and then the second trade was a sell trade. That was a winning trade. That's the trade that I've been having right now. That's the trade that I took right now. So I get wrong ones to do. Clean ones to do. Bro. This is the same thing that I'd have to do in the market. And I did this actually, but I had my entry around here. I didn't wait for the market section shift while trading lag. So I had my market, I mean, I had my first trade, second trade right around here, had my stop loss about this high, and almost got stopped out, and then boom, blah, 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 blah. After this, I'm gone. Probably after this, I'm gone. I closed somewhere around there after hitting the one, I mean, after hitting a winning day, I'm gone. So that's about it for Tuesday. Let's move on to Thursday. That's like a banging banger. Literally 2 days. Boom, boom. Same thing. It dropped, came back up, dropped again, came back up, dropped again, giving a retest again, dropping again. So it's doing the same thing again and again and again. And yeah, I couldn't actually do it. So let's see. I'm gonna do something crazy right here. So expanding 200 points and giving a reversal. I mean, on an average, 160 points, 200 points, and then a reversal again, 260 points. So again, it's expanding from 200 to 350 points. Okay, not bad, I guess. 326 points. That's another 250 points. It's doing the same thing again and again, again and again. So anyways, we got a winning trade. So let's go to Wednesday. Yeah. So that's 9 o'clock inversion. Holy shit. Exactly at 50% of that whole move. We are inversing a 15-minute fair value gap, and I'm going to be bearish for now. I'm going to look for bearish interest. So this is how you actually look at the price. So I'm actually going to be bearish after seeing that 50% reversal. And we also have 15-minute fair value gap being inversed. So that's 9:15. So it's time for us to go to 1 minute time frame. What is it? What is happening here? We are actually sweeping out these equal highs. So, and also on top of it, another equal highs has been swept, which is also the London Rejection Zones high. And what's left behind? So London low has been left hanging, and the other one is the Asian low, which has been left hanging. So once the price break out of this 25%, I'm gonna enter a short, enter a sell. So this is going to be odd, but yeah, I'm gonna just try on this trade because 50% inversing from there, inversing a 15-minute fair value gap, bouncing off of some sort of 5 and 50 fair value gaps. Probably that's a 5 minutes fair value gap and maybe also a 15-minute fair value gap. That's not a That's not anything. Let's see. I have to find this time frame. 5 minutes. We have a tiny fair value gap. Alright. We actually have a big fair value gap. Anyways, I'm not actually looking into that. All I'm seeing is the lower time frame narrative now because we got the confirmation for being bearish. So 50% rejection and then 15-minute inversion. So which says the price is gonna go down. So once the market open, price went back into the inversion, trying to rebalance it. Boom. That's my entry. That's my entry. Where would I keep my stop loss? I would get stop loss if I actually have my stop loss about there. Maybe stop loss going about that and target is going to be London low. Okay, enter another position right there. Gonna have my stop loss at this high. Gonna target market open low, which is a clear tight trade. So that's going to be two trades for me. Second trade, let's see how this one plays out. Okay, that's two losses. Why? Why did we lose two trades? Haha, didn't see that. Did you? So that's the reason why I got stopped out. That's definitely 50% of that whole move. And okay, that's why we got stopped out. We are heading towards this 15-minute unfilled fair value gap. What did I do on Wednesday? Aha. Yeah, I did the same thing. So that's the first trade. Same way I got stopped out. And second trade was a good entry, trying to target the opposing liquidity, and it happened. And the third trade's right around here, which is a sell trade. Was that on MNQ, bro? Yeah, that was on MNQ. So yeah, after swooping out this high, okay. So that's where I got the move, I guess. Boom, boom. There it is. There's a move. Why did I take this trade? Did I actually change the? Yeah, I did. This is actually the trade. This is actually the trade where I caught the move. So somewhere around here, 15-minute, after coming back in 15-minute fair value gap, you see the price actually was in the 15-minute fair value gap, and then nothing. So market structure fair value gap. So that's two confluence break-even point right up here, target the next liquidity. So that's what I did. Got the move in the day with 20 days. So I did crazy thing. So that's real. That's real. That's real. I don't even know what I did this week. So that shows it all. Taking the same trade, I was looking at the same thing. So that's where a third trade happened and ended up the day with winning days. So, but that's not going to be the whole point of this whole thing. I just wanted to see that the 15-minute fair value gap has been holding. So we got to see that too. And only Fibonacci is not the only key. And we also have a 1 minute inversion, which is I didn't actually see while before I took this trade. Or we also have 1 hour fair value gap right here, which is also a thing. And I didn't actually look into all these things. So that's a lesson. That's the whole point of doing this whole thing. So this happened. Anyways, let's go to the next day. which is Thursday. Thursday was another banger day, I guess. I don't really remember anything. So I'm gonna go ahead and mark out the 15-minute fair value gap, which is that we are still holding in, so another 15-minute fair value gap right there. So anyways, I don't care about that anymore. Let's go to 1 minute time frame. So we are sweeping out the highs, internal high, 15-minute fair value gap. Everything is going to be bearish. So price is also falling before market open, which is a clear sign the price is going to go lower, more lower. Maybe we can also see a reversal. Good. I turn it off. No. So let's see how the market opens. Boom. Market open right there. Boom. If you're going to actually see that, well, so internal spread. Huge fair value gap resistance flop. But we do have a 15-minute fair value gap inside a 15-minute fair value gap range. We are also sweeping out Asian and London low, creating market such a shift, fair value gaps. But let's see how this one plays out, right? Inversion, that's going to be a first and no. Ooh, damn. I'm gonna enter a sell right there. Reason is because of this 15-minute fair value gap inversion, and we are also creating a multiple breakaway gaps, which is this, and this, as I said, multiple breakaway gaps. So that's the reason why this trade didn't play out. And I still remember what I did on this day after seeing this inversion. I took a first entry right around here and I got stopped out immediately. And I lost almost 1% on that trade. So I risked 1% on that trade and I lost 1% on that trade. So let's go. After seeing this inversion, I got in a position right here. So what this is also a learning. So if we have multiple um if- multiple breakaway gaps, which is something like this, multiple breakaway gaps, one, two, three breakaway gaps, and on top of it, we are also inversing a fair value gap. So the price is gonna go much lower, and that's a sign. That's also a learning now. So probably this low, this is a hanging low. We didn't actually sweep out this low yesterday, so that could be a target, that could be a target, and also on top, this can also be a target. So clean targets. So we are also having inversion on top of it, a market sector shift on top of it, a 15-minute fair value gap inverse on top of it, a 1 minute temporary fair value gap. So even if you enter right here, keeping the stop loss above the market open high and target the next opposing liquidity, which is this. And if you really don't want to actually target the last supposing last liquidity, and this could be a thing. So use standard deviation that actually gives you the top profit. I mean, that actually gives you way to take profits. So at this point, this is going to be a clear, what the fuck should I say? It's going to be a clear target, but standard deviation gives you the best target. So, which is this, you could actually see that's a clear target. We have a fair value gap, some fair value gap, probably a 15 minute, probably 5 minutes. We could have some of these. Literally look at that. So, can price. price can actually bounce off this, probably respect of 50% of that 15-minute fair value gap and then go up. So that could happen, but after this fall, and let's see how this one plays out, right? So I am not actually, I don't actually know. So I have to actually look into these things when I'm actually trading. So let's go. Like it's actually a learning. So let's see how this one plays out. Even though if I know what I did on that particular day, I don't have a clear vision, but I do have something in my head that the price did this and that, but I don't actually don't have it picture perfect in my head. So it's just a um, what say, a vague, a vague idea about where the price is gonna go. So this is my entry, and this is where I break even the trade, probably take profits. Let's see. So that's a clear break even, clear break even. That's almost 1 is to 1. Yeah, 1 is to 1. So boom. So imagine go to the 5 minutes. Imagine you are actually going, you didn't actually still take your first trade, so you waited price to come back into a 5 minutes fair value gap or any sort of fair value gap. And that's where you got this 50% off that fair value gap. So you entered right there, keeping the stop loss about these highs, and probably entered right around somewhere here after seeing a 1 minute inversion, uh maybe right here, and having a stop loss about this fair value gap. So that's how you're gonna manage your risk. So for me, for now, most of it is gone. So I'm just gonna go really, it really aggressive. Do not make this I just have to do the same thing when I'm trading. Like, so let's go. Clear trade, clean trade, made back all the losses we did yesterday. It could be a thing, right? So clear trade, clear sell, looking for sales again, got stopped out, got wrecked. And this could be also a market sentiment. So let's see the one daily time frame. I'd show the daily time. So all right. So this is open. This is open. That's Monday open. Sweep out the high, came back down, closed lower, came back down, sweep out. Probably didn't really have a wick. So I don't know how this one plays out. Like I wrote something on my book when I was high. So I don't know. Yeah, look at that. So I had some thing on that. So like market sentiment and shit. So I just wrote that, and it was it was reasonable and I loved it. So I tried to explain it, but I couldn't. So let's go and complete this video. I mean, like, what, too far, too long. So these are the things that I need to do, bro. Like, imagine, keep that in your fucking mind, bro. You mean, keep that in your fucking mind. So breakaway gaps will always go lower. If you have a breakaway gap, if you see multiple breakaway gaps, maybe one thing the price can do is that rebalance from a high time frame fair value gap, which is this 15-minute fair value gap, which I got stopped out. So if this doesn't hold, if you have a clear buy entry of that, uh, don't actually take that trade. Wait for the trade to come back into 15-minute fair value gap or any sort of high temperature fair value gap, which we are actually looking at. If you're bearish, that's a bearish fair value gap. If you're bullish, that's a bullish fair value gap. So wait for the price to come back into it and then take a trade. And before that, if this sort of thing happens, you get a buy entry and it invalidated immediately. So wait for the price and look into the price, what it's actually doing, and then take trade. Something you could catch a position like this. And mm, I know for a fact that I was like going too fast and I was saying some trash out, but that's a sauce. That's a sauce. Market experience, bro. Gonna have to gain them a lot. Gain them a lot. So why did I target that? Boom. Always target the sorry candle open or close. Always target that. Don't target the wick. Always have that in mind again. So I'll be watching this again. So yeah, for sure I'll be watching this. Gonna go to Friday. Friday, motherfucker. Sweet. See that 15-minute fair yeah, 15-minute inversion. Do we have any? Yeah, we do. That's a fair value gap. See, come on, man. Huh. That's a clear liquidity zone. So that's the block. Oh, swept out the low. So sweep off the low and also internal sweep. I know I did what I did. I got stopped out on that trade. I got stopped out. So this happened. Once this happens, same thing. Same thing. Literally the same thing. What I'm gonna do, go to the 15-minute time frame, mark the next low, next possible low. Mark out that the next possible low is this. Clear, clean. And we also have a 15-minute breakaway gap. So that can also be a potential target. But the price is actually falling down really good. So maybe it could actually inverse that, maybe disrupt that too. So we did inverse final, what's that final fair value gap, keeping a stop loss above the high and target the next liquidity or next fair value gap, next consequent encroachment. So somewhere around like that. And I really need to pee, bro. Fuck, but I want to finish this. Okay. So why did I take this trade? Price invalidated a bad bullish entry. So you know what it is, right? So that's a clear break-even point. I'm not gonna actually risk more. We'll break even. I get that. Once this inversion happens, take an entry right here, target the next liquidity. That's what I did on Friday. So anyways, I got stopped out right here. So fuck it, right? We didn't actually lose. See that? See, oh, I didn't actually do it, but yeah. So clear things. So yeah, anyways, I fucked up myself after that. So not gonna lie, I hate myself on that. I hate myself on Friday. So could have just made that winning day. Look at me shoulders, bro. Look at me, my shoulders. Wait, wait. See, I'm out.